Do you have no credit or bad credit?
Well, I got bad credit, so the joke's on you.
Or maybe you just want to give your credit score a little boost.
I need a boost, and I need it now, all right?
In today's video, I will review the Koho Credit Building feature. So if you want to improve your credit score, make sure you watch this video till the end. What is Koho? Koho is a financial technology company that offers a cashback prepaid Visa with a no-fee spending account, savings account, and a credit building tool. I've already done a review on Koho, so if you want to learn more about their Visa card, I'll leave a link to my review in the video description below. So watch that video after you watch this one. This video will only cover the credit building feature. What is Koho Credit Building? Since the Koho Visa card isn't a credit card, it's a prepaid card, you aren't able to build your credit. So to help Canadians build their credit, Koho has a paid subscription service that is a simple and hassle-free way to boost your credit score. Currently, this feature is only available in Canada, excluding Saskatchewan. The only requirement to use this feature is to have a fully verified Koho account and have at least $7 in your account balance. To sign up, go to the video description below and click the link I provided. Using this link will earn you a $20 sign-up bonus. Once you get fully verified with Koho, the next step is to fund your account. Go to the Add Funds section and choose e-transfer for the easiest way. Here will be information that you'll need to enter to complete the e-transfer. Now go to your online banking and add a new contact for sending an e-transfer. Copy and paste and send. Your funds will be added to your Koho account within 30 minutes. Now go to the Tools tab and click Credit Building. Register to build credit. How would you like to pay? You can either do a one-time payment of $42 or 6 monthly payments of $7. I would suggest you do a one-time payment so you don't miss a payment and you can just set it and forget it. Now it will ask you how much of your line of credit would you like to utilize. Koho recommends you choose 30% or lower. Credit utilization is a big factor that affects your credit score. Keeping a credit utilization 30% or lower will give you the most points. Confirm to register and you're done. If you want to check your process, go to the Grow tab and Koho will provide you with your credit score. Here you will also see your monthly credit score history. So how does it work? Essentially, it works like a line of credit loan, but it's not designed like a normal line of credit. Normally with a line of credit, you would get a hard credit check, need to spend on your line of credit, pay interest, and pay back the line of credit to build your credit history. But with Koho Credit Building, there's no hard credit check, interest charge, or any requirement to actually use it and pay it off manually. Koho will use your line of credit based on the credit utilization you choose. Then they will report the on-time payments you did to the TransUnion Credit Bureau. This improves your credit score because of payment history, credit utilization, and credit history. Koho will do all of this on your behalf, so it's a passive way to increase your credit score. You may choose to cancel your subscription at any time, but be aware that it may negatively affect your credit score. Or after the 6-month subscription period has ended, you can choose to resubscribe to continue building your credit. You may also choose to subscribe to my channel to build your financial literacy and improve your personal finances, all for the low fee of hitting the like button and engaging in the comment section. The cons. The biggest con of the Koho Credit Building feature is obviously the cost. Although I think $42 for 6 months can be worth it, there are other ways to improve your credit score for free, like a no-fee secured credit card. Another con is that this isn't a long-term solution to building your credit. Your credit score will need years to build to get a very good credit history, and paying $82 a year can add up over a long period of time. But then again, there are credit cards which have much higher annual fees and plus interest. And lastly, they only report to TransUnion. Although you are building your credit history and score, you are only building it with one credit bureau. In Canada, we have 2 credit bureaus, TransUnion and Equifax. So if a lender is trying to give you credit and they only check Equifax, your Koho account won't show up there. So Koho, if you're listening, reporting to both credit bureaus will make this tool much more valuable. So how much can your credit score go up from using Koho's credit building feature? It depends. Koho has claimed on average credit scores increased by 20 points in 6 months. Now after a few Reddit reads, some users are claiming their score has gone up as much as 100 points in 6 months. But everyone's situation will be different. If you have no credit history, your score will likely go up more than someone with a bad credit history. If you miss a payment, receive a hard credit check, your score will go down. If you have other accounts like credit cards or phone bills that you pay on time, your credit score will likely increase more than just using Koho. Personally, my score has increased 21 points during the 6-month period, but Koho can't take all the credit for that, as I have 7 other accounts on my credit report. Also, my credit score is already very high, so increasing it becomes more difficult. Now you may be wondering, is this foolproof? No, it's not. If you fail to make a payment to Koho, your credit score will go down. That's why I recommend you do the one-time payment so you don't miss a payment. Also, I probably shouldn't tell you this, but since this feature is a line of credit, you can actually use the funds. Just go to the settings and click Credit Building Funds, then click Edit and transfer funds out. Koho does warn that taking out these dedicated funds may negatively impact your credit score, so just pretend they're not there.
Ladies and gentlemen, if you will, look right here.
Another question you may have is it worth it? It depends. Is $42 worth improving your credit score? It could be, but it would all depend on your personal situation. Koho isn't for everybody. It's targeted towards Canadians who struggle managing their finances. This includes users who suck at using credit cards. Credit cards are a tool to help you build credit and can provide other benefits. But if you suck at using credit cards, it can destroy your credit score, cost you more in fees and interest, and get you into credit card debt. If this sounds like you, then yes, Koho's credit building feature is probably worth it. Or maybe you have no credit history yet. This feature can be worth it to build your credit if you don't want a secured credit card. Because let's face it, secured credit cards suck. You gotta put down a security deposit, and most of them have annual fees and don't provide any cash back or additional benefits. And if you do get a secured credit card, you may be hit with a hard inquiry, which will decrease your credit score. Plus, down the road, when you go to get better credit cards, canceling your secured credit card can decrease your credit score. So a better strategy you can do is build your credit with Koho, then apply for a decent unsecured credit card that's easy to get approved for, has no annual fee, and has good cashback benefits. An example would be Tangerine, PC, or the Canadian Tire credit card. Just make sure these credit card providers are ones who check TransUnion instead of Equifax. You may also want to build your credit as fast as possible. So combining Koho with a secured card will give you the best results. If you don't miss any payments, of course. If you're looking for a secured credit card with no annual fee, the only good option in Canada is the Home Trust Secured Visa. But my favorite option is the Capital One Secured MasterCard. They do have an annual fee of $59, but my experience with them was worth every dollar of that annual fee. One last reason why the Koho credit building feature may be worth it: you may be in a great financial situation and already have a great credit score, but you may want to see that credit score go up even more. Whether it's for an extra little boost to get the best interest rates and terms, or maybe you just want bragging rights. I wonder what happens when you hit 900. In conclusion, Koho's credit building feature is a simple, easy, and almost foolproof alternative way to build your credit score and requires very little work on your end. If you mess up your credit score with credit cards, getting a secured credit card won't fix your credit card habits. So you'll probably get yourself in trouble again.
What are you guys doing?
But Koho helps you manage your money and helps you fix those bad financial habits. So maybe down the road, after using Koho and building your credit with Koho, you can get yourself a decent credit card that provides good cash back and other benefits, and even get yourself a low interest line of credit, low interest mortgage, or other products someone with good financial habits can take advantage of. If you want to continue learning, check out one of the videos on the right of the screen. If you have any comments or questions, let me know in the comment section below. Thanks for watching. Until next time, keep making money moves. Peace!